This is it, guys. There is two high impact catalysts on the horizon. Both of them are going to target Kaspa specifically, but the entire altcoin market is going to get tagged by this high impact event in today's video. We're going to break down in detail how to get ready for what's about to break down, where we got this information, plus bonus, we're going to do a deep dive into technical analysis, going over a trading system that's blowing up like wildfire across social media, a trading system known as the repeating trendline system. We can see this across Kaspa, across Tau. These trend lines continuously repeat. From being aware of this and then applying it, we can find when we're going to get resistance. And then by correlating macroeconomic events like we just did inside our VIP trading group, we can connect this to when a breakout from this angled resistance is going to take place. Now, there's two enormous events about to happen. The first one, the Bank of Japan rate hike. This is directly impacting global liquidity. At this point in the market, everybody understands quantitative easing, super bullish, quantitative tightening, extremely bearish. When we're zooming out on the total 3 altcoin market cap, the direct market top of the 2021 cycle, there's an FOMC meeting. What do? They hike rates and they start quantitative tightening. That's the end. A very easy signal to get in tune with. We're going to take a look at Kaspa's history and how we've used this personally to make 2025 a profitable trading year for Kaspa. Myself, just doing my crypto taxes, Kaspa was profitable for 2025. Looking at the chart, it's going completely down. Being a US citizen, I don't have access to short trades. This means, and we're going to bring up these trading plans as they correlate with points to what's about to happen right now. This means we're able to use our macroeconomic insight in combination with this repeating trend line to ultimately get out of Kaspa at the Bank of Japan carry trade and this rate hike in 2024, establishing clear resistance at 17 cents with downside that was eventually projected to where it ended up hitting. That's right here. Getting out of Kaspa again on December 10th. And waiting for 120 days until it drops down here. This is all correlated with what's about to happen right now. What's about to happen right now, we can link directly with these FOMC documents. Just to show you how connected reserves are, this document from September 15th, released on October 8th, right before everything crashed, it's talking about reserve levels. Now, you can dig up the FOMC minutes released every 45 days, and whenever you're finding out reserves are going to crash, reserves are super low, you're going to be able to correlate that with downside in crypto. This was just released 2 weeks ago, February 18th, and it reads the following. This is Bobby 911 in correlation with the Bank of Japan carry trade as well. With the RPMs continuing, this means Treasury bill repurchases. We're projecting to increase reserves until early April and then drop quickly and sharply as tax revenues flow into the TGA. First off, let's establish what is the TGA, who's running it. Scott Bessent, the President of the United States right-hand man, he's the Treasury of Secretary. He runs the government checkbook, known as the TGA. It's often correlated inside documents of the FOMC minutes. And just to prove to you that we're not the only people looking at this information, we can find documentation correlating connections to the TGA all over cryptocurrency. I've got that document to the side. We can see here, global liquidity cycle. As the government is pushing this capital up in the black line, their plans every 4 years, correlating with Satoshi's design. What they actually do is in the black line. And when they're getting that cash out there, that's when Bitcoin peaks. When it bottoms, this is when they're pulling that liquidity out. So there's an actualization of that on the Bitcoin chart. Here's how the Bank of Japan is connected. And this is big. Ever since World War II, the Bank of Japan has played a huge part in the United States finance. And yes, this, I know what you're thinking right now. Well, this has got to do with bonds. This sounds like FX trading, Jesse. What are you even talking about? Lo and behold, look at Kaspa. The last Bank of Japan rate hike on August 1st, that was Kaspa's all-time high. The next Bank of Japan rate hike was on January 28th. Now, they let everybody know 45 days ahead of time this was going to happen. Because they gave so much of a heads up, we were able to, inside our VIP group, sell out of Kaspa. As soon as this information really touched down, we can see this document here. This is from December 20th, as we just saw the date in the top. It's talking about selling all of our altcoins that we just traded for the rate cuts, the Moonwell, the DEAI, whatever we're swing trading for Kaspa. So if it's not in a 10-year hodl pile and you're actively trading it, we're selling that. So we're ultimately cashing out with plans for this downside to start in January. Now, personally, what I did, as soon as this news hit, again, this is on December 20th, right here, 2024, I just cashed out. I didn't wait to see if we were going to get a relief rally. Now, whenever there's writing on the wall of clear market downside, even back to 2021, you're going to get these relief rally scenarios. And these get the guys like the Crypto Johns, the Peach Fuzz Mafia, because they don't understand what's really going on in the macro world. And they jump on these relief rallies and they get burned. Kaspa just started picking up speed. This is almost attuned with the move that Tau just made. Tau also having these repeating trend lines. We'll get into the details on those in a minute. What we want to watch out for is getting caught in a bull trap. Let's say oil, which is right now 10 times. If you include the oil that's in the ground, it's 10 times the market cap of the Fed's balance sheet. The Treasury General account is about 1/10 the size. And that's what Scott Bessant's going to get a refill in. That's what they were just talking about inside those FOMC documents that we pulled up. Looking at the total 3 chart, we can see a clear connection. As soon as that liquidity is at risk, now we start to see downside. So there's your September 15th. Remember, that was the date that we just saw. We're looking at the history of these TGA refills. So they're saying in this document released 2 weeks ago, look out, we're about to refill the TGA. In a document from October 8th, 48 hours before the market crash. And this isn't back testing. We're using this stuff inside our VIP group. September 15th, they refilled the TGA. Well, let's see what happened on September 15th. we end up getting this double bottom. That's where that document comes out. And then Morgan Stanley comes in, 1-2 combination punch, and they put the crypto altcoin market down. Here's the TGA refill from April 9th. This is one of the reasons why, after just doing taxes, I had a profitable 2025 for Kaspa, despite the fact that it's been one of the most bearish yields. Here was our trading plans for Kaspa ultimately. Zooming out. So cashed out on December 20th. There was an opportunity, as we just detailed in that trading plan, to actually wait for January 28th. I didn't want to risk it. I just sold my Kaspa right here. So we're at 12 cents. In those projections, we're anticipating the downside. This is from December 29th. The downside is going to last 120 days. Here's from January 28th when it actually starts. Look at this. We're going to have to sit on our hands for 100 to 120 days. At the time, we were definitely focused in on Kaspa because we were getting all the good trades off of it. So we're anticipating 120 days. We get down to this market bottom. Here's what happens at the Fed. We're also using this repeating trend line, starting at the Bank of Japan carry trade, bouncing off of those rate cut trades. Remember, we're short selling the rate cuts because of this technical structure, and we're anticipating downside ultimately to the day and to the dollar where it arrived finally. Here on November 4th at the FOMC meeting, when they do more rate cuts, we'll get a rebound. So market crashes down right here. It's an FOMC meeting. What does Powell do? He talks about liquidity. A lot of times they'll just avoid it. They'll talk about your local corner store economy. Crypto-specific economy is dealing with liquidity conditions, just like this document is showing. And the Bank of Japan carry trade has an enormous connection with liquidity conditions. There's a correlation between Japan's stock market and the United States. The two economies are definitely tied together. Here's why. Institutional traders like your BlackRock, they're going over to Japan with their dollars. They're then ultimately borrowing, and it's a short of the yen because the yen's value is always declining against the US dollar. They're then taking that cash and they're ultimately rolling it right back into the bond market. And they're getting yield and interest rates. So instead of just getting the 5% the Fed's paying them on bonds, now they're also shorting the yen, which is continuously at a downslope compared to the US dollar, unless they're going to hike rates. Whenever they hike rates, there's a huge unwind. Kaspa deeply correlated with long-term store of value with the bond market. As crypto traders, we're ultimately also bond traders. We're trading the inverse to US bonds. When that liquidity is getting pulled out by BlackRock, when they're leaving their guaranteed safe haven, they're rotating into risk on assets. And this is a study documented across these niche elements of crypto. Very useful stuff. This is why we're always tracking the macroeconomic prints, as these are signaling up and coming liquidity pivots. So for one, the Bank of Japan might, it's not set in stone yet, but they might hike rates. And looking at the SEP released by the US just a few days ago at the FOMC meeting, there's a good chance Japan's really hurting and they're going to need to hike rates. That'll take place on April 28th. Now, aside from that, we've got the Treasury General Account refill. And this definitely includes one of those exit liquidity bull traps. At the FOMC meeting, Looking at the total 3, we can get a much clearer illustration of this. The FOMC meetings here, we get a rally out of it because Powell's talking about reductions in quantitative tightening right at the meeting. Not in the minutes like it usually is. When Powell talks about liquidity conditions at a meeting, that's a high impact catalyst for crypto. A lot of times he avoids it. So we're getting this bull trap right before the TGA refills. April 9th, and then again on July 12th, those are the bottoms of the altcoin market. They also run parallel with what event? The FOMC minutes. So as this document's released, now officially stating the Fed's liquidity positions, super bullish for crypto, we get a rally here and here, inversely working against the TGA refill. Fast forwarding to where we are right now, the altcoin market has been consolidating. Since this labor market print on February 6th, we've been waiting for any catalyst that can trigger upside. Of course, we had to go and get into an overseas conflict. This is where oil comes in. Oil, 10 times the valuation of the Fed's balance sheet. In the event we can get a pullback on oil to the 80 range this week, alongside a durable goods print, which is happening on Thursday, that's a high impact catalyst specifically for the AI sector. Looking at durable goods print, this is showing how liquidity is going to flow and into what sectors now. Because as that capital is released by the Fed, it's divvied out into manufacturing, robotics, artificial intelligence, factories, cars, defense. It goes on and on. So by studying the durable goods print, which of course we do in detail inside our VIP, we're going to get our best insight to when AI is going to break out. This is how we picked up BankerBot on that breakout. Reading the FOMC documents, hearing, hey, the AI CapEx is growing rapidly. We already know. This means through the bond market liquidity rotation, Tau, Render, these are going to break out. And as they get ready to pass that repeating trend line, very similar to what we see on Kaspa, this is a 5x leverage trade opportunity. Here's the cherry on top. When do we take profit? Is there more technical signals? There's macro signals, guys. The downside was completely correlated with these PPI prints. That's high inflation. There was one here on January 30th, or Friday, and then there was another one here on the 14th. This is take profit level 1 and take profit level 2. Render only made it to take profit level 1. Bitcoin didn't even reach take profit level 1 yet, surprisingly. Although in the event we do get that oil pullback and we get a bullish durable goods, guess what durable goods covers? It covers defense. The reason why we didn't get a big breakout last time is because the defense numbers didn't align with the regular manufacturing. So with this conflict efforts overseas, the upcoming durable goods print can contribute to a bull trap, exit liquidity for the institutions right before the Treasury General account gets refilled. And then once Scott Bessant has this money, we know he's pro-crypto, pro-AI growth in America. We're going to see a good rotation. So tons of volatility. There's the TGA refill here in September. It wasn't paired with bullish liquidity news. What we want to see, here's what's coming out on April 8th, simultaneously as we're anticipating the Treasury General account refill. More of these documents that we get all the insight from. Like this document saying, hey, look out for April. Like this document released on October 8th saying, hey, look out, the market's going to crash. There's going to be some downside ahead. We're going to get one of those documents So this can lead to a ton of volatility, a bull trap, sharp downside. Everyone's going to be capitulating. The leverage positions close out on Bitcoin and altcoins, and then the institutional investors are going to sweep in for massive chop. So cut and dry, it comes down to this. In the event around April 8th, the market is crashing directly down. Right then, get ready to open up Kaspa long positions. Because as that FOMC document is also released, we're looking for information regarding the Treasury bill repurchases, the liquidity conditions that the Fed's been focusing so hard recently on. So super good stuff. Let's jump into some comments. You guys realize that all the projections that I'm giving you, I'm not going to get on camera in front of tons of people, put my name and reputation on the line, and just tell you a theory that I'm hypothesizing because I've been in crypto for a decade. All of our projections, all of our trading plans, everything we're sharing in this video is sourced to Fed information. Now, it can change quickly. On a dime, in fact, as Pal just mentioned recently. But there is a rhyme to the reason. So with this question, what comes first, Tau 144 or 496? So we're talking about a retrace all the way back down to these March levels. It looks like we're going to see some support here at take profit level 1 at the January 28th PPI. Now, looking at the macro schedule to see what's coming up, we got the durable goods, which is Thursday this week. Then we got the April 3rd jobs report. That's going to be key. Remember, what just took place was that incredibly low jobs report. Shocking Powell, shocking the Fed. They wrote that off as a one and done. Already looking forward, economists are projecting it's going to be pretty low anyway. So that will be bullish. And then we have the Treasury General Account refill, the FOMC minutes, Tau, not as correlated as Kaspa to the Bank of Japan carry trade. It's a different asset class, Tau being artificial intelligence, Kaspa being a store of value. There's a direct connection there through the institutional investors. When they're taking their capital out of these long-term bonds, they've got it locked up for 10 years and they're going to get 5%. They want to put it into something solid. This is the birth of Kaspa, ultimately looking at the Fed's balance sheet on the Kaspa chart way back in 2023 when all these repeating trend lines started, whether it's Solana, Bitcoin, Tau, and by the way, Gareth Soloway, who's a master class in technical analysis, one of the biggest names in crypto and charting tactics. Just recently, he's been using the repeating trendline system in his Bitcoin videos. Of course, he doesn't trade altcoins, but he's renowned for his technical abilities. So this isn't some crackpot theory brewing in a few discords. This is a roaring fire in the underground of crypto. So what we saw here was there was a banking crisis. Remember, it was Circle Bank in California. The Fed's response, instead of doing short-term treasury bills like they're doing now, they went ahead and they just unlocked long-term bonds, which caused a huge rally that they weren't expecting. Because of the Bank of Japan strategies, institutional investors like BlackRock, they're rolling that into the yen and then going long Kaspa instead of bonds like they typically do. Therefore, we're getting this strong correlation with Kaspa and Bank of Japan rate hikes. Remember, once Kaspa flips bullish, it's going to have breakneck speed to the upside. And this is going to be supported by liquidity conditions once the Fed finally does pivot and they start buying long-term bonds. But back to Tau, the macro calendar right here. This is the typical consolidation range for Tau as is. I say that we are going to hold inside this range with a ton of volatility and chop into May, when Powell is slated to be replaced by a new Fed chair. AI is really booming. The AI capex is growing rapidly, and Tau representing that. Instead of scaling price, it's be much more accurate to scale when to buy Tau. For one, April 8th, with a market crash happening right then, representing a Treasury general account refill, that's the ideal time to start scooping up Tau. This FOMC minutes can definitely have some bullish information that'll cause a rebound, creating a V-shaped bounce. The Bank of Japan not hiking rates, that could happen as well. That itself could be bullish. Yeah, it looks like Tau's going to hold this range, and I would wait till April 8th. Good question. The next top after the April bottom will likely come when the Clarity Act passes with euphoria in the summer, similar to the 2025 April bottom to summer top. 2025 alts topped on Genius Act passage. This is an amazing point, and it also goes one step deeper to take an offshoot of what you're just saying. Remember when Casplex was about to launch the KRC20 inscriptions and they timed it directly for the rate cut in September? Right here. Oftentimes you'll find that teams across crypto and regulation correlates itself with macroeconomic pulses. This is the name of their game. So with the Clarity Act, let me show you an example of this historically. So the market top ends here. They start quantitative tightening. They start rate hikes, reversing from quantitative easing and rate cuts. So a super pivot at that FOMC meeting. It's all over, baby. Downside starts. They start talking about, oh, we're going to do this new crypto regulation, which ends up actually being the Gary Gensler attack on crypto. So right around here, you get regulation in tune. Now, this is a bearish example, okay, of regulation lining up with macroeconomics. So the Biden administrations, they release Gary Gensler and that entire onslaught on crypto regulation, ultimately debanking it. Owning a crypto data center myself, there was issues getting a bank account at Bank of America. They made us rename it to Computer Science Data Center. You couldn't even mention crypto or they wouldn't let you get a bank account. So this is an example of regulation pairing with the macroeconomics. Here, super high inflation. A lot of it's from that liquidity injection we were talking about in 2023. Let's see if we get the PCE up here. Here we go. So the PCE comes in and it is extremely high right on this print. And there's another super high PPI right here forming a double top. And Powell is now, and the Fed, they're saying, whoa, whoa, whoa. We're not going to be able to keep cutting rates and keep doing this quantitative easing. So we have macro conditions supporting downside. What happens next? They attack Binance. Everything BNB is ultimately becoming a rug pull. CZ is going to prison. What? Totally wild stuff. And it just shows they're aligning the macro headwinds with regulation. So pulling up the Say chart, we can see exactly where the Genius Act was released. Let's pull up Say here. Okay, so the Genius Act was released on June 27th. Huge rip to the upside on Say. We were able to capture that at the time. Say was there was negotiations in Wyoming for Say to be part of like a CBD type of program. So June 17th, that's the date we're looking for. June 17th right here. At this FOMC meeting, they're suddenly pivoting from the tariffs, from all that massive downside that we pointed out inside of all these other trading plans, projecting, whoa, there's going to be 120 days of downside, starting with the Bank of Japan carry trade, right? 120 days of downside, and this was all released on January 27th, anticipating that for days on end. That's when the Fed was projected to pivot. So once the Fed starts pivoting, and we're going to tie this into the Clarity Act right now, once the Fed starts pivoting like they did here, they said, oh, we're going to stop quantitative tightening. This was big news. The TGA refill, bull trap, and then the FOMC minutes comes out directly causing upside as that official document is released, going over into the QT halt details. Then here on June 17th, we get our Genius Act, and it's just days later. One of our best swing trade entries inside our group, I remember, this FOMC minutes detailed an update in the quantitative tightening schedule. Instead of stopping quantitative tightening in Q1, Q2 of 2026, they now anticipated in this document right here, and in this FOMC meeting back here, that they're going to slow that down to the end of the year, 2025, December. Super bullish for altcoins. And guess what they do? They align regulation with favorable macroeconomic headwinds. Now, really jumping into your statement, there's a ton of information that we can extrapolate from the Clarity Act. Of course, everybody knows about the fractional banking reserves using stable coins to ultimately extend the headroom of the fiat Ponzi scheme. This was going on at the December 18th FOMC meeting. We were able to put together half a dozen trading plans, really driving it to group members that River was going to rocket to the upside at this breakout. And we did about 2 weeks during this bear market of study, waiting for upside. Using these techniques, we are still able in 2025 to have a bullish outcome for Kaspa. Buying here, taking profit here on May 15th when Powell came out of nowhere and did a tactic known as jawboning. Somebody thought that was a customized word salad. That's a phrase specifically referring to the financial sector regarding financial sector leadership. So it's either Powell, the president, or Scott Bessant. These are the guys that can jawbone markets. Just by running their mouth, they can influence price direction. Of course, Powell always maintaining this neutral ambience. As soon as he leans one direction or the other, that's huge. So he comes out on May 15th and he's like, we're going to crash the market. We're going to change inflation policy. For Tau, this was huge. For virtuals, this was huge. This is the May 15th resistance trend line. And this, Powell's addressing just at the last FOMC meeting. This is tariff-based inflation. That's what he was really driving home. Tariff-based inflation at the May 15th line. Powell was almost giving VIP lessons, talking about how it's headline piece. Core PCE is one of the key factors in tariff-driven inflation. Of course, there's a lot of numbers. It's not just one number. There's half a dozen metrics, and they've all got to align. When one number zigs and it should have zagged, that can completely change the sentiment. Also, and this is what we're building inside our trading university, going over all this detail using our macro thing, our macro trading journal, excuse me, what classical patterns, not just trend lines, what patterns often associate with what macroeconomic events. For example, PCE, high correlation with the blow off top. When that PCE inflation comes out, there's a heavy correlation with a blow off top pattern. With durable goods breakouts, we see a lot of double bottoms. We saw that on Moonwell in 2024. We see it on virtuals right here. We also see it on Banker Bot. A swing trade we were able to put together inside VIP in the AI agent sector, timing the breakout exactly at this durable goods entry. That's a durable goods print. Kaspa right now, this huge inverted cup and handle. We exited Kaspa in our swing trade positions completely right here. So after May 15th, we took profit. We bought back in here. Now I remember after taking profit here, there was then an Iran conflict right back here in 2025, and we got it 48 hours before this wick down happened and then sold it out again here. That mitigated some of the profit from this swing trade, but we were still able to correctly swing trade Kaspa throughout the bear market using this macroeconomic insight and simple angled trend lines that repeat. The May 15th sell-off, and so on. Kaspa, very easy to swing trade. Once it starts to flip and pivot to the upside, it's going to be big. And this is correlated to that May 15th trend line. So Powell was saying, the Fed themselves, this has nothing to do with what I think or any triangles or anything like that. Although, as it begins to develop, we're going to apply technical analysis to it and get a deeper insight. This May 15th trend line that we just talked about, inside of our VIP group, on May 15th, we just sold our whole portfolio, recognizing that this was not the true bear market rally, that there was going to be downside and consolidation right on May 15th, getting into cash and waiting for a broader market pivot. This, across any crypto chart, was an awesome trade. Getting out on May 15th, keeps trying to surpass this trend line and can never make it over. This is Tao. So what Powell just said at the meeting and what they have inside the previous FOMC documents, I can pull this up and show you quotes. It reads, by this summer, tariff inflation will be gone. That means the May 15th trend line will be under attack at that point. Whether the rallies begin this summer, which makes sense, some people are hypothesizing this fall is going to be when the bull market starts. And because of the conflict overseas, there's going to be extended downside. I'll show you quotes from the document. With the effect of higher tariffs on inflation expected to wane starting around the middle of this year, inflation was projected to return to its previous disinflationary trend. direct correlation with these trend lines. There's really two different waves of inflation that the Fed's dealing with. They're dealing with all their money printing from lockdowns. That's bad enough, affecting the global liquidity cycle, creating these peaks and valleys in Bitcoin and all of altcoins. But now to top it off, they've got tariff inflation. And now they've got the overseas conflict. All of these Chad level callouts from Q1 of 2025 in January, they were all from the FOMC documents. I pulled them out in a recent video. I'll tell you what they said. Because of the new administration, there's going to be tariffs and there's going to be downside. And they had that all across federal documents dating back to December 10th even. Right here. This was released on December 20th, December 19th, 2025. Watch out for the Bank of Japan policy shift on January 28th. And also watch out for tariffs because there's going to be a 120-day downside. This is all in those FOMC documents. And what those documents are telling us right now is the Treasury General account is about to refill. It's going to be super choppy price action. Plus, the Bank of Japan, they might be at it again, doing another Bank of Japan carry trade. Well, it just so happens it's time for the deep dive on that quote, because our Kaspa repeating trendline system is directly correlated with angled Fibonacci, which we have proven throughout this trading journal, has been extremely accurate in trading Kaspa. I'll give you an example of using this. And we'll fast forward to right now, and I'll show you how we've been using it just recently, just right now today, to project when Kaspa is going to see upside and when there's going to be future resistance. So this is way back to that huge downside. The rest of the altcoin market rallied. Kaspa, the KRC20, we're able to use this repeating trend line to project downside ahead. Before we fast forward, let's go way back in time. So this angled Fibonacci, and I'll bring up some trading plans inside our VIP that show we've had this set up since December 1st of 2025. So this isn't something that we just like lined up right now, just because it makes sense in the day. This is something that's been projecting Kaspa's price path. Now with Fibonacci bars, as we know, as soon as we get away from this consolidation of trend lines, this compact resistance hovering around the golden pocket, now we start to see price action has a wider range of growth. And this is exactly on Kaspa how we've been charting it. It's getting past the golden pocket that can be challenging. And scrolling back to our first videos, we've been using this angled Fibonacci since April of 2023, all the way until we captured the 10x leverage trade on Kaspa, which of course aligned directly with an FOMC meeting, which is like a no duh type of catalyst. As we can see, all of these green emojis, those are FOMC meetings that contained bullish headwinds for Kaspa. Jumping over to the Coinbase stock, those exact same FOMC meetings in a totally different sector of the financial world are still super bullish. Okay, this is Coinbase stock. You could consider this a store of value similar to Kaspa. So this is when we purchased Kaspa inside our group. June 2023, the FOMC meeting, just under 2 cents. The cup and handle, the breakout, that massive breakout on Kaspa, which we 10x leverage trade on the main channel. Smash the like button, hit subscribe for more heads up when there's going to be a huge event on the horizon to take into consideration. And we can see each time Kaspa had a green emoji, we might as well have been option trading Coinbase. We could have gotten more leverage, because it's the exact same thing. Back to the technicals. Yeah, these Fibonacci zones are very helpful, and we've been using them time and time again to just lock in great trading plans. Another example is coming out of this downside. Again, that's an FOMC meeting, so it's almost like on easy mode, right? But not only is it on an FOMC meeting, but as we zone in and we correlate that with a compact angled Fibonacci, the PCE prints that are forming the top, etc., we get a clear signal of when to enter a 10x Kaspa leverage trade, which was right around May 20th. And then there was a massive breakout. And just like the trend lines repeat, look at this. The Fibonacci zone also has a spooky resemblance. Okay, now zooming into right now, that's the history of this angled Fibonacci, showing that we've already had this set up for weeks, over a month. Can just take you into VIP, where we've correlated this with different macroeconomic prints, etc. Off of this original repeating trend line, we've got the angled Fibonacci, and this is when things are going to start to get X-Files level spooky. So originally, we've got this charted out, and we're thinking, okay, once we get to the gray zone, that's when our breakout's going to take place. So let's align this with macroeconomic events and see when our big catalyst is going to be. So let's say this BLS level right here, when they did a lot of scheduling of macroeconomic events during the government shutdown, PCE, bond market, everything's closed. The government employees are laid off. It was a massive impact to crypto specifically that depends on these prints for their automated bot trading at the market maker and institutional level. So we're assuming this 4 cents level is going to hold, which takes us to about February 18th, right around 4.5 cents. We're at February 18th, which was, of course, the FOMC minutes. Previous breakouts have been associated with that. So we assumed originally it would be February 18th right here, and we would get a rally to the upside. In fact, that's been delayed. Now that we've reached the gray zone, we're seeing upside moving over until the next resistance. Once we touch this blue zone, that's going to be resistance. As we've seen time and time again, all the way back to 2023. This repeating trendline structure isn't going to go away. Now, you can cross chart this with your standard Fibonacci levels, with just your parallel. But this is way more in depth, particularly for finding when. So when this is going to happen. In the event oil does go down and that durable goods print does show bullish headwinds, Kaspa rallies up to 5. That's not out of this world extraordinary. That can definitely take place. Makes contact with this resistance at the Treasury General Account refill date, right on April 8th. Of course, we can adjust this a bit, so that's the golden pocket, giving us a range of when this downside is going to happen, or the Bank of Japan carry trade. which is April 28th, which we've just proven time and time again, Kaspa's most high impact catalyst, hands down. There's nothing that's moved markets as much as Kaspa's Bank of Japan carry trade. It's just been the entire reason. For one, Kaspa saw a massive upside when they did that liquidity injection in 2023. BlackRock and the institutions, they're running over to Japan, leveraging the money. We didn't know at the time, but we assumed Marathon Digital, some big players are getting behind Kaspa. Meanwhile, all of social media was flooding them. It's safe to assume BlackRock and those guys are leveraging up their Kaspa position, utilizing the Bank of Japan. Instead of rolling it back into bond yields, they just rolled it into Kaspa. And ever since Japan's been hiking rates, that's why Kaspa has been on this downside. That's also why Kaspa held up when the rest of the altcoin market was capitulating before the rate cuts, when they went after CZ from high inflation. Render, projects that trade very similar to Kaspa, they're all capitulating here, seeing a ton of downside that really put Kaspa on the radar because it was holding up. So it's a fairly logical hypothesis that that's correlated with the Bank of Japan hikes. Looking at the downside that they've caused, it's been significant. Back to the Fibonacci. So on April 28th at 4 cents, we hit this resistance. We hit this next angle trend line. Now it's downside. And we're going to have to flip that. A great example of how projects flip these angled trend lines. And we've recorded this in our trading journal numerous times for Kaspa. We've got videos on how it sets up from 2023 that say this. You're going to see price action testing this angled resistance. Then you're going to get a break above, often a retest of the top side. Anyone who studied trend lines, the basics of technical analysis, they already recognize. Often when you are breaking above a trend line like this PPI macro-based resistance, this got flipped into support, you're often going to get a retest of the top side. Now we've gotten stopped out twice by the January 14th PPI. In the event the oil pullback does happen and durable goods, which will impact Tau heavily, we could even break above this and then flip, test this as support, pull back to 240. So the opportunity to purchase Tau has already come and gone. Congratulations to VIP members who scooped this project up on the low throughout this range using our technical insight. As an American, I don't get to short. And let me rephrase your statement. I don't think. None of these trading hypotheses, none of these trading plans are correlated with my personal experience. Everything that we're sharing with you guys, all of our trading plans, as much as we're able to possibly do it, are correlated with macroeconomic data. To run this by you, these are the FOMC minutes. You saw the FOMC meeting that just took place. People are starting to understand this is, wow, super high impact for crypto. We just showed the Kaspa and Coinbase chart, all the biggest breakouts, FOMC meetings. A lot of those meetings, Powell talked about the liquidity. He talked about QE. He went over details about bank reserves, repo markets. That's all high impact for crypto. When Powell doesn't talk about that stuff, the catalyst pivots to the minutes, which is released 14 days after the meeting. And you can get tons of inside information about what the Fed's talking about regarding liquidity conditions inside these documents. And I'm going to show you an example just to rephrase your statement. I don't think this. This is what the macro data is suggesting. So just to pull up an example, and you can go back to FOMC minutes correlated with Treasury General Account refills and find this exact same language used. Reserves fell sharply on September 15th, that being released on October 8th. Here's the one that was released 2 weeks ago, February 18th. With Treasury bill liquidity injections continuing, reserves were expected to increase until April before dropping quickly and sharply as tax revenues flow through the TGA. So remember, September 15th, in response to a refill in the TGA, and then this document goes on to explain how there's thin liquidity conditions. We did a post on this inside VIP before the October 8th market crash. Let's zoom into September 15th and see what they were talking about. September 15th right here. So they're refilling the Treasury General Account. You're getting that double top. Here comes the FOMC minutes that we just read, talking about in the rest of that document, there's additional quotes. Wow, the government shutdown, it's really impacting reserve levels. The reserves are running low. Remember what that recent document just said? The reserves are about to run super low when they refill the TGA. The last time they refilled the TGA was right here. And we can see that on the TGA chart. They're getting downside April 9th, June 9th, April 9th, June 9th. And this is money that Scott Bessant's getting from the United States taxpayer. So the way it works out is the liquidity conditions in the United States, that's a bad chart to be showing. The liquidity conditions in the United States, it is a similar bank-to-bank setup. The repo market liquidity, the amount of capital that the Fed's actually been injecting into the system, when this is low, remember, banks are constantly fractionalizing this money. They're 10x leverage trading it 10 times over, like in that movie, The Big Short. So it makes this setup very fragile. The market makers posting up all the liquidity for crypto, they're also the market makers in precious metals, in stocks, in Forex. The Forex markets and crypto have the strongest correlation with liquidity conditions. So when you get a sharp drop, meaning there's no capital around, this impacts crypto as market makers are trying to get their hands on more DXY. There's not a lot of cash just floating around the whole financial banking ecosystem. And it's this correlation with the big picture banking liquidity that Satoshi used to connect to Bitcoin. This is the global liquidity cycle of the banks. It's got nothing to do with crypto. This chart dates back to 1970 when Nixon was looking to swindle France, going off the gold standard. Their plan is every 4 years, they push liquidity into the economy, they build jobs, they get everything rock and roll, but then that causes inflation. Then they have to pull it back, and they use the bond market to do this. Here's a study with the Global Liquidity Index, and it just shows how it's impacting Bitcoin's peak. This chart isn't Bitcoin's price. This chart is showing the actualization of what Satoshi modeled the Bitcoin having after. That red line is their plan. The black line is what actually happens. And so these treasury general accounts are like a microcosm of liquidity restraint. So, to rephrase, the hypothesis based on macroeconomic data and the correlation of banking reserves, repo markets to crypto suggests that there'll be a short selling event for Kaspa. Also, in the event the Bank of Japan hikes rates, that's going to be your better day trading actionable event, because we know exactly what day that's going to happen. That's going to happen exactly when the Bank of Japan carry trade, they hike rates, again, affecting this liquidity conditions. This is a crash. So the Treasury General account, I'd probably let that one roll. It's going to be too volatile, a bit unpredictable. You could buy the bottom spot, but in the event the Bank of Japan does hike their rates, it will be directly on April 28th. And that's a short sell opportunity. Absolutely. For ultimately almost any crypto, in my opinion, based on this theory. Wallet tracking, super important. The hash rate for Kaspa's got to pick up as well. As we showed historically, the team will wait ultimately for favorable macro headwinds before going ahead and doing huge pivots. This is similar to what Casplex did. Luckily, Kaspa team members and the Kaspa community was able to talk Casplex out of their cheesy smart contract upgrade, which they were going to try to align with the rate cut that happened in September. You guys remember that? Why didn't they do it? You could come up with 100 on-chain reasons, but even more importantly, there was a summary of economic projections, meaning they're voting on the rate cuts. The last time that they shifted and made less rate cuts was right here on December 10th. They said, oh, by the way, we were planning on cutting rates in 2025, making a beautiful bull run in altcoin season for all you guys, and we just changed our mind. They went from like 3 rate cuts in Q1, and they said, now there's going to be none. We might even hike rates. How that went overlooked by the broader crypto community, by all of social media, is beyond me. But you guys, from subscribing to this channel, from getting into this niche information and sharing it across the web, has started to raise awareness throughout crypto and social media. So people are getting better information. Once you understand the macroeconomics of it, everything else becomes nonsense, complete nonsense, the stuff that these guys are coming up with. And if you are a skilled technical analysis, macroeconomics is going to take you to the next level. Absolutely. Wallet tracking is extremely important. You guys all know what happened with Clanker recently with the top 3. It's wallet number 3, 4, and 5, or 4, 5, and 6. They're all brand new. They started on March 1st. They bought 75% of Coinbase's supply, removed it off the exchange. Where have we heard that one before, right? Removed it off the exchange to put pressure on market makers to buy. Here's something interesting about Clanker. For one, the Farcaster team who built Clanker, they were hand in hand with Brian Armstrong. They were the original OGs of Coinbase back in the day, coding with Brian Armstrong. They're listed on Coinbase now. You guys remember the X402 information? This whole pivot for AI agents. Now they're not just chatbots. Now they've got wallets. Now they're making transactions. This was all launched on Clanker. And we can see some influence to being in California with the entire language behind X042. Silicon Valley has a high impact socially because they're centered around social media. One of the reasons why Elon Musk purchased Twitter. So Clanker is ultimately behind this entire pivot, which is huge for AI agents. The way we were able to put together the banker breakout from using those FOMC minutes, just like we were seeing the liquidity crisis coming up, we also see the keyword artificial intelligence used across multiple different FOMC minutes. Banker bot was getting a ton of volume, elevated mindshare, things like that on cookie.fun, which is a pay-per-access hub for AI agents specifically. Let's get back to that one in a second. This is a great question right here. What do you guys think about the sound effects? Thumbs up, go with them, or does it disrupt the whole flow? Powell just addressed this directly. And it's been included inside these FOMC documents time and time again. Going back to May 15th. All right, now I believe that this is, I unlocked this for free tier, so I'm going to drop it in the comments for everybody. Smash a like. There's a VIP post that's going to help you a lot looking forward, because this is all about May 15th, guys. All right, so this post came out on the day. So this wasn't an FOMC meeting. This wasn't a PCE, a durable goods, or a minutes. Powell just came out of nowhere with a surprise speech, which is, for you guys that are already experienced in macroeconomics, it's great to have somebody watching your back. Our VIP group, super reasonable price. You never know when valuable information you overlooked because you weren't spending hours a day combing through macro data. Powell comes out and he gives this speech. There were only 2 creators that covered that. We did. Meet Kevin covered it as well, although because Meet Kevin is a stock trader, he somehow thought that this was a bullish speech. He didn't really put 2 and 2 together, although the Wall Street Journal and multiple other financial outposts were saying, yeah, this is really bearish. We did a Meet Kevin video, and then after that, he started doing FOMC bingo, which is kind of similar to our sliding scale. So happy to see that our tactics are starting to percolate out there on social media. What Powell said here is, again, it's back to tariffs. Tariffs, as we showed you in all these older trading plans, back from the market downside, right when the new president got voted in, tariffs. Tariffs were inside the FOMC documents. I pulled those out on other streams, but I don't have them ready to go right now. You can pull them up in your free time. So what's going on with that May 15th level? That's tariff inflation, all right? There's 2 kinds of inflation. There's inflation from all the money, the printing they did in lockdown, and then there's tariff inflation. Your tariff inflation is always going to be correlated with the May 15th level. And this macro connection, some people think, is this guy nuts? What's the connection between macroeconomics and resistance? We can see right here. PPI on January 30th and PPI on January 14th, we have been continuously sharing across our main channel and in our VIP group as the 2 take profit levels. because they're correlated with macroeconomics. I don't have any of those trading plans drummed up, but you guys have probably seen those in recent videos. I can see it on the Bitcoin chart where we've had it clearly outlined. Yeah. This was our first take profit and this was our second ever since February 18th, when we were originally hypothesizing the upside would be. Look at how well Tao has respected these macro-based trend lines. This is the combination macro hybrid tactic that's spreading like wildfire across crypto. Resistance and support. So how this applies to Kaspa hitting 10 cents is very easy. These macro trend lines are very important. And for Kaspa, that's the May 15th level. Let's get rid of some of these drawings. Now, we were able to use this to take profit on our swing trades. This is why Kaspa was profitable for us in 2025, despite it being a drastically bearish market. As Americans, we can't even short trade Kaspa. So we're either going long spot or we're not trading it. Yes, this insight can be used for leverage trading exceptionally well. Taking profit again here, bouncing off of that level. So the correlation is simple. It's also on virtuals. Powell was just saying, once we get rid of tariff-based inflation, and he actually went to the trouble to define what that is, core PCE. And there's a huge connection between CPI, which is consumer inflation, and then PPI, which is the producer inflation. With tariffs in effect impacting prices on goods, yes, the core PCE is up. PPI and CPI should both be up, yet they are not. And the hypothesis inside the Fed is as following. The PPI inflation is elevated, but the CPI is not. These have all been bullish recently. These have been causing upside in the altcoin market. They've been causing in-range breakouts in Bitcoin just recently. The PPI inflation has been destroying the market. Starting on January 14th, everything was going bullish. Surprise, PPI print, high inflation. It wasn't even scheduled, you guys. And then again here. So we have to beat, and this is actually in Fed documents. We have to get above tariff inflation, and then we can surpass the May 15th trend line. Therefore, my target for this year, with the conflict in Iran, it does look like the meat of the bull run. While AI can have an early breakout, there are specific projects like, example, remember guys, River, we got a 30x upside in the middle of a bear market. We timed it to the day on market downside. We've got trading plans where we're haggling to get into River at $3.50. I was getting emails from group members who was like, Jesse, I got in at 5.25. It went up to 8, but I didn't take profit at the treasury auction. I let it ride. Should I sell now or wait? And I was like, definitely wait. Wait for the December 30th event. This should kick it to the upside where they release that crucial information about banking liquidity, the repo market, exactly what's going to get impacted by the Treasury General Account refill, and on a larger scale, the Bank of Japan carry trade. So these Fed documents are saying, and these are screenshots For our VIP members, they read this. With the effects of higher tariffs on inflation expected to wane starting around the middle of this year. That's what he was talking about on May 15th. I posted the May 15th event in the comments. It was all about tariff inflation. That same tariff inflation that they were talking about when the original, everybody in social media was saying, oh, we're going to break to the upside here. But we knew, because they were talking about tariffs, because they were changing the rate cuts. I mean, the writing was on the wall at that point, guys. There was no way around it. The market was going to crash. It was time to sell. The May 15th, meet Kevin. He captured that event, shows he's on his game, although he did get a different sentiment. Now, I don't know. He does real estate. He does stocks, so I don't want to put words in his mouth. There may have been other upside because of that in housing or in select stock sectors, but for crypto, it was definitely bearish. This event was under the guise of rate cuts. So Powell cut rates at the exact same time. He says, oh yeah, well, remember how we were going to continue cutting rates and kick off this bull run along with our halt and quantitative tightening? We decided to cancel that under the guise of one rate cut. He decided to cancel the rate cuts just like they did here. That's why we were saying, wow, big event about to happen just this week with the FOMC meeting, because it's a quarterly report. They're doing the rate cuts. And this can change too. This is where it is today. These are the projections now. As data keeps rolling in, PCE, PPI, durable goods, Powell keeps talking, he keeps running his mouth. Everything's going to change. I remember specifically bouncing out of this entry, which I pulled up inside VIP after waiting 120 days. We get back in Kaspa. We truly should have been able to time it exactly at the FOMC minutes. This correlation between the meetings and the minutes didn't start till later this year. Powell's now avoiding talking about banking liquidity at the meetings. So the meetings aren't the go-to catalyst for crypto recently. It's been the minutes. That's when they're talking about the liquidity. That's what matters for us. Everything Powell's talking about at that meeting, it's important, but it's not to the day high impact stuff. That'll all come out on April 8th. We were originally anticipating a rally back up to 16 cents. And I believe Powell was as well, because he came out and he gave that speech and he stopped altcoins in their tracks and set a precedence that won't be revisited until this summer when the Fed hits their tariff inflation goals. Make sense? Smash the like button if you put that together and you agree that this Fed data regarding inflation, understanding the May 15th trend line that's across multiple cryptos, from Tau to virtuals, it's been really stopping the action. Powell's talking about a rally to reattack that level late this summer. The meeting news is Treasury General Account refill, and the Bank of Japan may do a carry trade. April 28th. Those are high impact events. You got to be ready for them. We've got a hypothesis. Thank you for sharing. Good statement. I'm seeing Kaspa going back to the October price, 1 cent, considering 90% reached there. We have a few coins before reaching that level. Yeah. 1 cent is Looney Tunes. 2 cents makes sense with the inverted cup and handle. The average downside places it at 2 cents. In the most bearish event possible, okay? We get the Treasury General Account refill. The Bank of Japan hike rates. Powell extends his term. He's not replaced in May. He stays in for an extra 60 days, 90 days. That would be really bearish. There's levels, just like how that macroeconomic trend line worked, how we showed on Tau, those take profits. There's levels that the institutional traders, the market makers are purchasing at, and they have complete control over price action. They adjust the bid-ask spreads. This is part of our theory inside VIP. We pulled up multiple documents supporting this. Why, no matter what prints out here, we've been able to hold this range. Yeah, 2 cents. Looking back on Solana, Solana's pulled all the way back to, these are crucial FOMC meeting dates, like November 2023. That's when Kaspa had its original God candle. Solana's right around there. Kaspa, being a top 100 project, runs similar to Render. So Kaspa and Render, they do typically run together often. Where's the full Render chart? Here we go. Renders all the way back to, yeah. They're all the way back to the October level. Yeah, October level for Kaspa, we're already below that. The FOMC meetings here, the FOMC minutes is here historically, and those are levels that market makers use to make their purchases. That is just going to be a line in the sand. What I would consider a more useful tactic, forget about what price, because you're going to be able to find with a higher level of accuracy what date. Everybody's always like, price. When's it gonna hit 2 cents? But what we can do with a massive level of accuracy, as we've proven in this trading journal, this post from December 20th, where we're anticipating the entire market, Kaspa and everything else, is going to crash at the January FOMC meeting. And from there, because of these events that are scheduled, there'll be a downside for 100 to 120 days. This is on the event when it finally happens. And that comes true to the day, to the dollar. In that hypothesis, we never say this price level or this, because those are all up for interpretation. That's a way more volatile range. What we can accurately do is find days and times, specifically using this macroeconomic hybrid level. For Kaspa specifically there, projecting January 28th, it's going to drop. There's January 27th, we're at 13 cents. We drop down for 120 days, exactly like we anticipated. And for the broader altcoin market, it's the exact same thing. So we're taking profit at the top, knowing it's going to happen 45 days in advance. And then we're sitting on our hands doing side bag swing trades for 120 days, studying the market, studying on-chain stuff, researching sectors, RWA, waiting for this huge macroeconomic pivot in cash, in huge piles of cash. And this, of course, allowed 2025, for me, having just done my taxes, to be a profitable year for trading Kaspa, despite the fact it was on the total downside. And as an American, I can't short trade Kaspa. huge down on Kaspa spot. You think we see an old all-time high this year? No. I'm pretty confident it's going to be the May 15th level will be the peak with consolidation. Now, depending on how events go from now until late summer, when Powell's projecting we break that, we could wick above May 15th, but we're going to start to see consolidation back at the May 15th level, which just happens to be what? Let's extend that trend line. Of course, right? Makes sense, right? We get back into our old range where we're trading here. So in the event things go well and we break out to 16, 18, personally, for swing trades, I'd be looking to take profit and retest back here, but that's very down the road. Too early to call. No. Kaspa's price action is heavily based in liquidity, specifically the long-term bond quantitative easing. So right now, to prevent what Powell did in 2023, there was also a banking crisis. Right now, there's a banking crisis. We can read about it in these FOMC documents. We can see it on the news with the government shutdown. That stopped macro prints. All kinds of government employees aren't going to work, and they're talking about doing RPMs, which is treasury bills, which is a short-term debt, a way to avoid the Fed fully pumping the market like they did back during lockdowns. When the Fed builds their balance sheet of long-term bonds, this is when Kaspa's going to go Bazooka Joe. This is when all the doubters, all the haters, they'll start to FOMO in. Once long-term QE kicks into effect. In order for the Fed to do this at the level we want, returning their balance sheet to 2022, 2021 highs. They've been selling their balance sheet off. This means they're taking cash, which could have gotten invested into crypto, off of BlackRock, off of institutions. Ultimately, this entire cycle has been under the pressure of quantitative easing, quantitative tightening. What kind of cycle is that? I pity the fool. Once they flipped the script, it's going to be on like Donkey Kong for Kaspa. Because of its correlation as a store of value crypto. Plus, there's all this on-chain growth, the KII, that's just going to add to it. Marathon Digital, owned by BlackRock, they've already invested in Kaspa. It's already the chosen project. When this starts to really go up, and that's not going to happen until the Fed reaches their long-term 2% inflation goal. So we've been talking about and covering the May 15th event, the May 15th tariff inflation. We've been showing trading plans, how we got out at the top, waited 120 days, and then bought into the bottom because we understood the tariff inflation. That's different from the long-term inflation that's going to dictate the Fed building their balance sheet. We're talking 2028. That's the target today. Now, the new Fed chair might have a different outlook. Tariffs and AI might be able to speed up the decline in inflation. But it's not until the Fed starts building their balance sheet that Kaspa will go completely crazy. In the most bullish event, we might retest all-time highs, but it's too early to say that. Definitely, the move is towards the May 15th level. And I believe that that answers those questions. Great point here. This guy's using his technical analysis, customized skills to get insight combined with macroeconomics. Now, one of these charts, I have the previous Bitcoin death crosses outlined. I believe they're here and here. Combining your technical analysis skills, whatever they may be, to this macroeconomic insight, this is going to give you what you need to get an edge. This is going to increase your bottom line to the next level. The university that we're building right now as an add-on to our course, to our VIP group, is going to go into the deep end of combining our technical analysis skills to these individual macroeconomic prints. Example, inside our pattern directory, there's so many people that don't even understand the difference between a rising wedge and an ascending triangle. One's bullish, one's bearish. And it's all about the market psychology at the time. What we're going to do is connect these technical patterns to the macro prints that they're most correlated with. And this should be eye-opening. Here's a great example of this. The Adam and Eve double bottom. We're seeing this in AI. And this is a labor market print on the Adam, the V shape with a rounded bottom after. We're seeing this all across cryptos that have broken out to the upside. Psychologically, what this represents is there's a rapid market sell-off. Buyers are panicking, but there's a strong resurge of buyers. So everybody's panicking, massive selling, resurge in buyers. And then there's that rounded bottom, like a cup formation, showing a slow transition of the buyers taking over the order book. Therefore, once the sellers capitulate, rounded bottom, sellers finally capitulate, then you get parabolic upside because all the sellers are out. They panicked here, they slowly lost control here, and then we get our breakout. And that correlates directly with macroeconomics. So we're going to put some deeper insight into our technical analysis, as well as really give everybody the rundown on how all this liquidity stuff works, the individual events, how they impact crypto, what sectors are more correlated with the different macroeconomic prints, so forth and so on. We got a lot of great stuff already up here. And for 47 bucks, it's a huge value. Courses like this, they usually cost 300, 1,000 bucks, but we want this for the everyman. Great question. Starting with the technicals, Bitcoin is showing a clear, what pattern is this, guys? On the long term, right here. That's a head and shoulders, as clear as day. Can't deny it. Another top 10 project, also showing a head and shoulder pattern. Solana. It also showed a head and shoulder pattern last cycle. Again, all of these shoulders, the head, this is all correlated with macroeconomic events. This is when they voted on the dot plot. Originally saying, oh yeah, we're going to have all these rate cuts throughout here. Solana's going to rip to the upside. Nope. They cancel it. Then the Bank of Japan hikes rates. Everyone waits for tariff inflation, 120 days of downside. We bounce. And then here, oh, the September 15th Treasury General Account refill, liquidity reserves are down. And then Morgan Stanley, they find out liquidity stressed out at that FOMC minutes on the 8th. They released a regulation for crypto stocks and it causes massive downside. This head and shoulders has already retraced 70%, which, pulling up our classic pattern chart reference tool, that's what we're looking for, is minus 70%. For Bitcoin to reach minus 70%, it's still going to come down lower. The Treasury General Account refill. And a Bank of Japan carry trade. Let's zoom in here. Let's look at the last year's Treasury General Account refill. So we just saw the September 15th one. Let's look at last year's big April refill. We got 10K of downside in this rapid volatility. This is what I'm trying to give everyone a heads up for. There's going to be some monster chop. And when this capitulation happens, the day of, people are going to be like, it's over, sell everything right now. That's when we're going to want to be hitting up spot positions. A 10K wick down here will take us to 60K. So right in this range, it's 50K. That's a full 70% retrace. As far as the eye can see, it's April. That's the Bitcoin bottom. Now, there can be a change of events that extends downside, continues consolidation, or even creates a bit more downside. Powell doesn't get replaced. Congress still hasn't voted on it. And just like the conflict between Democrats and Republicans started the government shutdown, they won't vote Powell out for the same reasons. It's still in Congress. And the rhinos are in on it too. So there's a chance Powell stays in office. Not a big one, but it's out there. Right in April. Treasury General Account refill. Bank of Japan hike. We're good to go. The new administration inside the central banks in May, hopefully they're going to have a whole new outlook. And there's a ton of economists, journalists that are in this niche of the market that believe they will. That they will start to pivot things around using a different strategy, trying to combat inflation with growth. So they're going to look to stimulate the market to get out of inflation instead of all this cautious retracting of liquidity. All right, let's pull up this monad. So here's the FOMC. What I do immediately, as soon as I look at a chart, is I want to correlate all the recent macroeconomics and see who's on first in terms of price action here. So we did see some upside at that key FOMC minutes on the 30th. That's important. That's what caused River to rip to the upside. We've got some rounded bottom, a double bottom pattern here. So technically, I really like this. We are seeing a different structured Adam and Eve setup here. It's a double bottom showing buyers gaining control rapidly and then slower. The sector that this is in, Ethereum virtual machine scaling. Why is this so bullish right now? This is one of the sectors that we are vetting projects out inside our VIP group for, because of that Morgan Stanley regulation. Meme coins, crypto self-licking ice cream cone. They're fighting against that with regulation as we speak. Therefore, the institutional investors, that Morgan Stanley regulation that crashed the market, that's in a deferred vote. At any time, they can come back and say, oh yeah, guess what? All these projects that aren't real businesses using blockchain to scale, we're not down with them. We don't like them. They can't be associated with the stock market. All these meme coin ETFs people were talking about, that's all done. That's never going to happen now. Moving forward, they're pivoting away from that. And obviously, utility traders appreciate this. The pivot is into real world assets. This includes Ethereum scaling because they're running it all on Ethereum. Base is going to be huge this year. Ethereum is going to be huge this year. They just had a shareholder meeting inside the wind for Bitminer immersions. This is the micro strategies of Ethereum. They have a huge stockpile, over $1 billion cash on hand. They just funded Mr. Beast, who's a huge YouTuber on Amazon now. They gave him a $200 million DeFi check. When the bull market starts to rotate, when the Clarity Act gets dropped, which is going to run along with this macro headwind, once the macros are in favor, now suddenly, here we go, Clarity Act's coming, you wait. There'll be a big macro pivot, and then boom, they'll launch the Clarity Act because they know this game that we've been explaining. They know the secrets of how central banks impact the market. These guys went to Harvard for our economy. They understand how it's correlated with real estate, precious metals, everything. Ethereum scaling supports RWA. So what I would do researching Monad, which at a glance, absolutely solid project. Is it scaling Ethereum for the artificial intelligence sector, for the RWA sector? Who's it partnered with? Is there a big partnership with PayPal or OpenAI, Anthropic, something like that, to look for gems of research? Figure out what they're scaling Ethereum for to really unlock the deeper value in this. How I would do that, I would pull out the 24-point checklist, and before I write up a full report, I'd use the 84 AI copy-paste questions and just copy-paste those and put Monad in, including, this is an important one, particularly for AI agents right now that were chatbots. When we get down to the GitHub section, as a layman, we won't be able to understand what's going on in the GitHub. It's written in code by coders. It's going to fly right over our head. That's fine. We've got AI. We're going to use our AI tool to see what's the team building. What are they working on? So with our AI agents, we want to look for a pivot from a chatbot into what? X402 wallets. Can they start doing payments on chain? Again, as macroeconomic conditions start to warm up, that's when the team are going to start going public with what's happening right now in the GitHub. Yes, we found projects that are doing this. So it's an ongoing narrative. That's what I would do to get more information about Monad. Yes, looks legit. The play now is gain liquidity with AI agents on base. And we've got some tickers of AI agents themselves with strong dev teams. With the Genius Act in mind, even the average crypto investor who knows a lot about on-chain technology, they understand Ethereum sharding and everything else. For those who have overlooked Satoshi's eloquent design and how he entrenched with the 4-year halving into the global liquidity cycle, how correlated crypto is with the banking system, and how it's going to change the fractional banking from this day forward when the Clarity Act is released. It's going to be a massive impact event. Absolutely. With the new administration taking a posture of stimulating liquidity, leaning dovish, as they call it in the Fed, doing long-term quantitative easing, maybe even throwing in a rate cut or two, even keeping rates the same, as long as they do long-term quantitative easing, that's actually better. That's a more potent catalyst, because when you're cutting rates, you're just suggesting that BlackRock pivots their money out of these bonds because now they're paying less. You're also instigating loaning, things along that line. When you're actually doing quantitative easing, you're just putting cash on Main Street, which is way more bullish for crypto store of value projects like Kaspa. Yeah, the Clarity Act can be huge. And we have specific projects like River in that sector. When we got River, it was a $30 million market cap. That's a range that we target right around 100 million, because you can get the most incredible upside. When we originally got into Kaspa, it was 200 million, right in that range. Of course, Clanker, in my opinion, is great. We just saw the breakout on BankerBot. Clanker, in my opinion, is positioned to rally either as early as this Thursday's durable goods or the April 24th durable goods, which will happen after the TGA refill, when there's a high probability that the entire market starts to rotate upward. Awesome, guys. So be ready. The Treasury General Account is about to refill. The Bank of Japan might hike rates, and this is a high impact catalyst specifically for Kaspa and all of altcoins, which will cause a lot of chop and volatility. Particularly when Bitcoin starts to feel the effect, they're going to be saying, this is it, it's over. Meanwhile, we know the institutions will use that headwind to start to purchase. Looking back in time, that was here, where we saw a range all the way from 88 to 74 in 8 days. Putting that into perspective right now, oil drops to 80. The durable goods print comes out bullish. This impacts all of crypto, specifically the AI sector projects we have lined up. So we get a bull trap. We get a big rally. But this rally is going to be muted, not because retail turns the other way, but because of this liquidity just getting drawn out of the entire market, like we've seen in this document telling us about it time and time again. We've been able to use this effectively to get out of the way before downside. And it's a great time to enter spot on our big store value projects, on your Bitcoin, on your Kaspa, based on this thesis. Thanks for checking out this video, guys. Make sure that you smash the like button, leave a comment, and subscribe. Hit that bell notification. You never know when we find valuable Fed information. And right now, with crypto keyword search at an all-time low, according to CoinMarketCap, we're releasing tons of valuable information, and there's still even more studies and data inside our VIP group, which is unbelievably friendly price. Usually, this level of data. This type of course sells for $1,000. It's on sale for $300. Plus, we're getting these ongoing trading plans, correlating the technicals with the macros. You can get in here for $47. And yes, we had one of the most profitable VIP groups of 2024, 2025, because we give so much value at such a discount price. Since Andrew Tate came on the scene, they're suddenly like, yeah, mark everything up and sell to rich clients. We're keeping it old school, providing the most value for the least price. And guess what? Bottom line, we had one of the top 100 best performing Patreon groups in the world, not just in crypto, for everything. So a lot of information here, and a lot of people will vouch, yeah, we've got some good insight in here. There's a lot to learn, and you might pick up a swing trade along the way and pick up some capital, even though we're in a bear market. Thanks for checking this one out, guys. We'll catch you in the next one.
Flawless victory.